So thank you all for joining us. We've got a pretty exciting presentation today. We got Ramez with IRA Club.
Sure.
We've he's got a he's going to explain to us what the benefits of a self-directed IRA, and um, we've made it very easy for any of our investors to sign up for a free account. Is that correct?
That is absolutely correct. And to your point, it's not just an educational piece about self-directing. It's more so an educational piece on why you need to self-direct and diversify your retirement portfolio. So I'm really excited that you're having me on board do this. And like you said, I'm just going to keep it interesting, keep it fun, keep it light, open it up for, like you said, for Q&A. Any private, I know some of you that are maybe listening may have a private question for me and or George. So you could put it in the private chat because everyone's goals and situations are a little bit different from everybody else's, and they don't want to disclose anything out loud, especially when it comes to retirement dollars. So I'm more than happy to answer questions on the side too. So that makes you happy.
Makes sense, makes sense. So, a good portion of our investors use their retirement accounts to invest in. So we thought this was great to bring on an expert in the field and kind of
Awesome.
be able to answer any questions. So at this point, if you want to go ahead and just take over, and if anybody has any questions at any point, go ahead
Yeah.
and drop them in the Q&A or in the chat.
John, you're already hitting me right with a quick one, huh? You've been with Quest Trust for 10 years. And you know what's so funny, John? One thing that you're going to love about me is I wear my heart on my sleeve and I say it how it is. Unfortunately, yes, Quest Trust was just bought out by Inspire, which was part of Millennium Trust. Millennium Trust, believe it or not, is just buying up a lot of the companies within our industry. For those of you that may have an account with IRA Services Specialized, their digital IRA. There's a few of them that I hate to say this out loud. The big fish are kind of eating up the small fish and consolidating our industry. As long as Ramesh Fakori is a partner, one of the managing partners at IRA Club, I will not sell. I promise you guys. The reasons why is I want to be able to offer more for our clients. One of the things that you're not going to like about Inspire, and I will say this out loud, I will never badmouth my industry. I will tell you straight to your face, I like Quest Trust. They control the Texas market, but I don't like who bought them. Okay, and I mean this why? Because their fee structure is astronomical compared to IRA Club. I will get into that a little bit later and discuss fee structures so you guys understand that. But IRA Club is a flat fee model, just like Quest Trust is. I know Quest also offers the opportunity to do percentage-based models. But our entire industry, I feel, is shifting over to a percentage-based model, which is not good for you, the investor, and us collectively as a whole, to us investors, because at that point, it doesn't make me any better than Fidelity, Vanguard, or Schwab. Okay. And that's why I'm going to talk about numbers a little bit later. I hope that answers your question. Feel free to follow it up with some more. Highly recommend that you sit down and talk to either me or Mandy or somebody. By the way, we are doing a special offer for any Quest client. All fees are waived. I don't care what the fees are, John. All of them, from membership fee to asset fee to wire fees, buy asset fees, and everything. It's all wiped out clean for 2024. Hope that answers your question. Um, George, do you want me to just lead into it?
Yeah, yeah, yeah. Sorry. Go ahead and
Oh,
take
I'm
over
sorry.
from
I just thought maybe, okay. So one of the things me and George were discussing was I know Elevate, one of our newest partners and sponsors on IRA Club's platform. We're very excited, George, for the opportunity to educate your investors, your students, your clients. You are now officially, as of this morning, I don't know if you know this, I'm going to give you the good news, on Investors Row. So congratulations. You guys just
Awesome.
passed compliance. You guys are on Investors Row. So good for you guys. Kudos. And I'm just going to kind of lead it right into it. But sharing my screen, if that's okay with everybody. Give me 1 second. All right, 1 second. Share. And can you guys see the big screen right here?
Yep.
Forgive me. Here we go. Start from the beginning. All right, and that's what we're here to talk about, the power of self-directing. Like I said, I'm going to try to keep it as interesting and seamless as possible, but the term self-direction honestly just means in our industry, it's a marketing term. It just means control. We're going to talk about taking the control away from the Fidelities, Vanguards, and Schwabs of the world and giving it back to you, the investor. A little bit about myself. Who cares? We don't have time for that. Feel free to schedule a call with me, and we could discuss everything you ever want to hear about Ramis Fakori and how I got started. Just know I've been here for 10 years. My wife has also been here for 14 years. She helped start the company. And she's the one who introduced me to self-directed retirement accounts. Now, I think it's a little bit more important to talk about IRA Club. And IRA Club is a self-directed full, let me repeat, full administrator. So it's a very big deal. We are going to handhold you through this whole process of self-directing. And many of you that are listening for the first time and you may have heard of a self-directed retirement account, please forgive me. Some of it might come off as being a little bit redundant. But for those of you who have never heard of IRA Club, again, many of you have retirement accounts. Let's just say, for example, I'm always going to use the big three: Fidelity, Vanguard, Schwab. And IRA Club, just like them, we are a trust company that allows you to use a portion of your retirement accounts to diversify it to different asset classes. We've been around since 2008. Our founder, Dennis Blitz, is a really big deal in our industry. Many of you use fiduciaries, registered investment advisors that have maybe a series 3 or 6 or 7. Well, this is the gentleman that wrote the text and the test for the US government. So those CAPA books that you may read, he is the author. So again, very well-respected man in our industry, started IRA Club as literally an investors club, transitioned it over into IRA Club. We currently administer 15,000 clients with just a little over 1.25 billion under administration. We've helped educate thousands and tens of thousands, if not hundreds of thousands of individuals on this strategy. And that's what we're here to talk about. But I always like starting off with the question, George. I'm going to ask you, how safe do you think our retirement accounts today are? If you were to say, like, spitball it, do you think that they're very volatile, a lot of like shakiness going on, people are freaking out? What are your thoughts on that?
I would say right now that's probably the segment. Yeah. I mean, things have been
True.
pretty volatile. Yeah.
100% true. Think about this. Every single thing right now is working against your retirement. Everything. We know the stock market's been very volatile. In fact, we took a big hit last week. Okay. We know taxes are never going to be lower where they're at right now. And Jesus, Camilla, let's not talk about what she's proposing, but just think about this. Taxes are on the way up. I hate to say this to you. Taxes are on the way up because you simply cannot put trillions of dollars into the economy and not think that taxes are not going to rise. That also includes inflation. Although obviously trending in the right direction, think about how long it took us to get here. It's still here, though, at the end of the day, and it definitely works against your retirement account. Not to mention every single government program that we have is in complete shambles, all right? From Medicare to Social Security, Medicaid. Think about this. You're talking about $2.2 trillion was bailed out in the last 2 years. These are not sustainable numbers. Not to mention, George, as you well know, there are no more pensions being offered. Okay, they're scarce. It's less than 5%. Back when the IRA was introduced in 1974, which I'm going to get into that. But ultimately, what we allow our clients to do is diversify. That's the answer. That is the key. You cannot be dependent on the stock market alone inside your IRAs and 401ks. Because think about this. Your 401k with your employer plan is sitting within stocks, bonds, in particular, mutual funds. In fact, 83% of employer plans are inside mutual funds. Okay, that's a scary number because that is their definition of diversification: large, mid, small, international stocks and bonds. This is not our definition of diversification. In fact, this is what the average IRA Club member's account looks like here at the IRA Club within the last 5 years. If you take a look in particular, real estate, syndications, and private placements have exploded. In particular, again, syndications and private placements. They've actually make up about 30% of our IRA Club members' accounts here. The rest is blended into stock options, crypto, we see bonds. But by the way, I'll get into this a little bit later. We do allow our IRA Club clients to choose their own stocks also. Okay. We don't have a problem with the stock market. We just know how to harness it and accelerate your wealth that much faster. But speaking of the stock market, George, I don't know, and I apologize. This actually came out a little bit blurry when I was looking at it. But if you were to take a look at the last 20 years, because when it comes to retirement accounts, I like to look at things decade by decade. Okay. When you actually take a look at that uh, um, purple line, if you bought a house back in 2000 and until this year, okay, you're talking about actually May of 31st, 2023. So it's not that updated. It's about 4 or 5 months off. But if you were to take a look at your house, if you bought a house, let's say for $100,000, you made a return on 196,000. Remember, we don't traditionally look at our houses as assets, okay? And I'm not saying to anybody that they shouldn't own a house. I always feel as an American, you have the right to own a house, but we're just talking numbers at the end of the day. Versus the blue line, okay? If you invested, let's say, $100,000 in the stock market 20 years ago, in particular, say the S&P 500, you made 321% returns on your money. Versus if you invested in real estate, multifamily, syndications, land, whatever the case may be, you're talking about a 2,100% return within this orange line. There is no comparison when it comes to the stock market and real estate. I personally am an advocate of real estate. That's what I know and understand. This is what I use my retirement dollars to invest. So I just want to be clear. Numbers don't lie. These are things you could go Google yourself at the end of the day. But as I travel, George, you know this, I travel all over the country. I educate people on this strategy all day, every day. Probably have a team of 5. We do about 45 to 50 events a year. Okay. But it's always the same reasons why people do not self-direct. It all starts off with number one. Okay. Lack of knowledge. 97% of Americans have no idea what a self-directed IRA is. And once they do learn it, this is the best question I always get. I'm too old to get started. Forget it. I'm 40 years old. I'm 50 years old. I'm 60 years old. The average American lives until 80. When are you ever too old to tell Uncle Sam to kick rocks? Never. So it's always good to diversify your retirement dollars into hard assets because you defer paying taxes or not pay taxes at all. So number one is always educating yourself on different types of strategy. Self-directing is just a strategy. 2, and I hate to say this because this is the one thing that IRA Club cannot do for you, is choose the investment for the investor. Otherwise, what's the point? I'm taking the control away from the Fidelities, Vanguards, and Schwabs of the world and giving it to you, the investor, so you could invest in what you know and understand best. Nobody cares about your money more than you. So I hate to say Americans are not savvy investors. That's why they heavily depend on fiduciaries, registered investment advisors, broker dealers, which, by the way, I do not have an issue and or problem with these individuals. I come from a massively big family, George. My mom's got 9 brothers and sisters. My dad's got 9 brothers and sisters. I have hundreds of first cousins. I think like 140 first cousins. And let me tell you something. We have our fair share of doctors, lawyers, and financial advisors, and they hate me. They don't invite me to the Christmas parties, the thank you. I'm just not invited. Why? Because I teach their clients this strategy called self-directing. Again, everyone's got to earn a living. I love my family. Don't get me wrong. They actually have taught them to use this as part of their strategy when it comes to their clients, and they actually now love it. But understanding who's taking all of the risk, okay? You, as the investor, are taking all of the risk. And they do this through fear, through artificial restrictions. No, you can't do this. That's what a lot of fiduciaries and financial advisors will say to you, or broker dealers. You can't do this. You're going to cause a prohibited transaction. So be careful. Most of them actually call us at the IRA Club to get better clarification on this. So these are the big 4 reasons why people do not self-direct, okay? But before I move forward, I think, again, George, I think it's important to understand the history of self-directing, okay? And how it came to fruition. All retirement accounts, 401ks, 403bs, 457s, TSPs, HSA, they all stem from the IRA, established in 1974, okay, from Congress, because really, like I said, pensions were no longer being offered. Back then, it was about 47% of companies offered it. As I mentioned, today, about 5%. So The Treasury Department literally needed to address this. So they created the individual retirement account. I will tell you a little bit later how it got hijacked. The only four things that you cannot do within your IRA or any qualified retirement account is you could not invest in collectibles. Those are the rules according to the IRS. You could not invest in your own life insurance policy. Okay. You could not do transactions with a disqualified person. So think of a linear ladder. You, your spouse, your children, your grandchildren, your grandparents, you could not invest in their deals and vice versa. Okay. Within your retirement account. And lastly, you could not invest in an S corp because you're already getting the tax benefits of it. In the IRS's eyes, it's called double dipping. So Dennis Blitz refers to self-directing as a gift. Okay, our president. Every single retirement account allows you to self-direct and self-direct into whatever it is that you want. Okay, I think it's the most underutilized gift for accelerating your wealth. So always remember, any retirement account could be self-directed. Okay. So the importance of it is it allows you to take back control, as I mentioned, that offers you flexibility here at the IRA Club to let you choose different alternatives. I don't care if it's real estate, land, syndications, private equity deals, life settlements, crypto, anything your heart desires outside of those three things that I told you earlier that you cannot do. It also allows you to grow tax-free or tax-deferred your growth depending on the type of retirement account. So for example, if you have a traditional IRA or a traditional 401k, you are going to take the tax deduction up front. So if you have an IRA, if you're under the age of 50, it's a $7,000 contribution. If you're over the age of 50, it's $8,000. So it's a deduction towards your taxes. And then later on in life, after you reach the age of 59 and a half, you will now penalty-free be allowed to take those distributions out, but however, pay taxes on those distributions, okay? Versus a Roth upfront. You pay the taxes upfront on the seed, capital gains for the rest of your life are tax-free. So those are the two differences, the only two differences between the type of retirement account, okay? But always think about this. This is what I teach all IRA Club members. Get this man out of your pocket. He makes up almost half of what you make in your lifetime. And the fastest way to do that is through self-directed retirement accounts. Again, one strategy of many. There's other ones out there, 1031 exchanges, for example. But what most people do not realize is when you use a retirement account, you're not just eliminating the federal tax rate, you eliminate all taxes across the board. State, Medicare, Social Security. I know somebody here, I think, was in the state of Texas. Good for you. You don't pay a state tax. But I'm sure some of you that are listening from California, or in my case, Chicago, Illinois, where I have a 6% tax rate. So think about this. Right off the bat, I'm saving on anything that I invest 14.5%. I'm also in the highest tax bracket. I am always thinking about how to contribute more money into my Roth first and being obsessed with the investment process. Because I know all day, every day, I could hit 15 to 20%. So be more obsessed, not with the contribution limits, but the investment process, okay? So I'm going to give you an example. Depending on time, depending on how much you're investing, right? The longer you're investing within your Roth or your traditional, the faster you accelerate your wealth. But what I try to educate our clients, our students, all right, our investors, is there's a big difference when you use personal dollars versus using traditional dollars versus using Roth dollars, okay? This is how you accelerate your wealth 25 to 50% faster, decade by decade. So let's use this as the example. Let's just say hypothetical scenario, you want an annual rate of return of 10%. By the way, I'm being very conservative, George, with these numbers at 10%. I know your numbers are better than this. I always like to tell people, think double-digit returns. You can't be dependent on that 5, 6, 7, 8% that the stock market's going to give you. Otherwise, you're going to work forever. That's the truth. So always think double-digit returns. But let's just say for the next 10 years, you have $100,000 at Fidelity. You roll that over to the IRA Club for the next 10 years. You're making a 10% return, very conservative. I see this all day, every day. And you are still making your contributions. Hypothetical scenario. but I want you to see the difference of what that would be after 10 years when you use your personal dollars versus using Roth dollars versus using, I'm sorry, traditional dollars versus using Roth dollars. You made almost $118,000 more using Roth dollars at a 10% return. So don't you think it's just as important to diversify not only your personal funds, but your retirement funds in the exact same manner, in particular a Roth, which is why I'm a huge advocate. But the problem is none of us are in the driver's seat. And in particular, I'm talking about the 97% of Americans that leave their retirement funds in three places. In particular, bank CDs, annuities, and the stock market. Okay. Now, I'm not going to take up too much time about bank CDs and annuities because that only makes up of, I would say like just under 5%. So 4.7, 4.8, give or take. That number has increased dramatically in the last 3 years. In particular, I'm talking about annuities. Okay. Again, there's nothing wrong with them. Everyone's, situations and goals are a little bit different from the next. But in particular, I've been seeing a lot of brokers and financial advisors leaning their clients into fixed income annuities. And what do they promise them? You don't have to worry about the volatility of the market. Okay. You're guaranteed your 5%, let's just say for the next, whatever the terms on 10 years, 15 years. But you listening as the investor, can you please tell me that you could do better than 5%? Yes. Otherwise, leave. No, I'm kidding, George. I'm kidding. Totally kidding, okay. But think better than 5%. Okay. Double digits, always. Now, the other one that I want you to focus on outside of bank CDs and annuities, okay, is the stock market. Just under 91% of all retirement accounts live in the stock market, in particular, mutual funds. We could get into that a little bit later. These are the three big, I call them the big three. George, you know how much money sits inside retirement accounts? Just out of curiosity. All
No,
retirement accounts.
no idea.
44 trillion.
Wow.
And did you know that these three companies control just under 70% of the $44 trillion?
That I can believe.
Fidelity. Did you know that? Most people do not know that. These three companies control just under 70% of the $44 trillion. All of America's wealth outside of real estate sits within our retirement dollars. They're in control of it. So Fidelity is number one. Something else that you may or may not know. Did you know? I'm just asking out loud. Fidelity, is it publicly traded or is it privately owned?
I would think public, but I'm not sure.
Private. One
Oh,
family owns Fidelity. They control 33% of all retirement accounts. Okay. Think about that. We have no idea what these guys are making. They don't have to disclose, excuse my French, everybody listening, shit if they don't want to, but they make billions of dollars on percentage-based models, which we're going to get into later. So let's talk about this. According to CNBC, let's talk numbers, okay? Because this is what most people don't realize what they're giving up. The average retirement account balance in the US by the end of 2022 fell, 401ks in particular, 23%. And this is, by the way, according to CNBC and Fidelity. I should drive that home. IRAs lost 20%. 403b, so if you're an educator, lost 19%. So by the end of 2021, you had 135,000. It dropped to 103. IRAs 130, 104, and so forth. Fast forward. So I'm just going to go from 21 to 22. We already know that it dropped. Look at what happened at the end of 2023. The 401k actually went up 14%. So it jumped from 103 to 118. Same thing with the IRA. It jumped about 12.5%. Take a look at what IRA club members and where their accounts ended up. Let's fast forward. I'm sorry, before I fast forward, I want people to realize what they're giving up. And I think the next slide, George, is one of the most powerful slides before I get into IRA club clients and their accounts. What do you think is the most important asset in your life? Something that you'll never be able to get back.
time.
There you go. Time. This is what most people do not understand. Their most important asset is time. It's finite. You're never going to get it back. Once it goes back, 1 second, 2 seconds, 3 seconds, me educating you guys for the next hour, I'm never going to get that back. Why am I driving this home to you? There have been a total of 12 recessions in the last 50 years. Okay. I'm not going to go through all of them, but many of you that are listening do remember the 2008 crash. My father did, my uncles did, a lot of my family members did. Think about this. If you were approaching retirement, let's just say you were right there at the cusp of being 60 years old. I'm thinking about it now. And you had $500,000 inside a 401k and you literally lost half. It went to 250,000. Could you retire, George, now? No. You had to work an additional 4.3 years of your life just to get to that break-even point. That's what most people do not understand within retirement accounts, in particular employer plans. You give up control and there's nothing you could do about it. These are very volatile times. You said, George, you said it yourself. Correct me if I'm wrong, George.
No, that's right.
Right?
Yep.
So let's fast forward to 2022. COVID hit. Everybody was living life. 2021, we're dumping money into the economy. All 401k skyrocketed. Okay, we know we lost 2022, we lost 23%. However, we went up, right? So if we go back, we went up. We went down and then we went right back up to 118 at 14%. But what most people don't get is you're still down. So this year, up until this year, you're still down. So at bare minimum, you gave up 2 years of your life. I don't know what this year is going to end up. Honestly, George, there's too many things are working against your retirement account. Everything right now, I would say, is at a standstill here at the IRA Club because everybody's terrified because of the election.
Yeah,
So
election year is always tough.
always tough. It always tends to, and that's what everybody's waiting for, right? But that again, let's just say conservatively, you made 7-8%, right? It doesn't matter. You still broke out even. You're back to what you started at the end of 2021, which means you lost another year of your life just to get to that break-even point. That's what I'm trying to drive home, because the ugly truth is these plans, this system, the retirement system is designed to benefit them, not you. And they do this through artificial restrictions. In particular, be careful, because in the last 2 to 3 years, I've been seeing this more and more, where Fidelity, Vanguard, and Schwab have been marketing and training their salespeople to say, why is your client moving $400,000 over to the IRA Club when you could self-direct with us? What they're not saying, George, is, let's just use you as the example. You have an investment opportunity. Correct me if I'm wrong. If you
Correct.
had a client that wants you to invest with their IRA or 401k, hypothetical scenario, is Fidelity or Vanguard or Schwab going to allow that?
Not sure. I don't think so.
No, they won't. They're only going to say, sorry, this is your pool of investments. That's not part of the portfolio. Instead of giving them the right answers, move the funds over to the IRA Club so they could invest a portion of their retirement dollars into, I'm just using you again as the example, into your deals. That's how they're supposed to be talking to their clients, but they don't, because they have to keep it in-house in order for them to make money on your money. And think about that. The only time that you get paid is when the market is what? Up. If the market is flat or if the market is down, do they still get paid? Of course they do. So think about who's taking all the risk. You are, at the end of the day. So be careful when the Fidelities, Vanguard, Schwabs, and these other 10,000 brokerage firms are telling you that you could self-direct with them. It's not true self-direction. All they're telling you to do is go pick your own stock, your own ETF, your own mutual fund, your own bond. That's all they're saying to you. But this is what I was trying to drive home. We already know at the end of 2020, 2021, how great everybody was doing within their 401ks. I want you to see what an IRA Club member's balance was at the end of 2021. Full disclosure, this is eliminating minor accounts. So anybody that's under the age of 18, I don't count them, okay? They don't have enough money inside their retirement accounts. I'm talking about anybody that's over the age of 18. Starting balance, end balance at 2021 was 200,053. I've been talking to a lot of people today. George, this is my second webinar. So forgive me, my brain is kind of scrambled at this point. But I want to fast forward to 2022. Okay. We know that the markets went down, but take a look at IRA club accounts. They didn't go down, they went up. Why? Because they're in control of their retirement dollars. That's it. They just shifted from the stock market into alternatives. By the end of 2023, it didn't go down. Again, it went up. It's because, again, they're in control of their retirement dollars. They're ahead. You're always going to be ahead when you're in control of your money, looking into alternatives. Now, this is one of the most shocking stats you're going to ever see in your life. 65 million IRA accounts across the country, of which only 2 million of those accounts of the 65 million have $1 million or more. That's it. So what are the other 63 million IRA accounts doing wrong that the 2 million are doing right? It's simple. They're just in control of their money. They're self-directing. That's all they're doing into alternative investments. So that's how I want you to view this and the takeaway of like this whole presentation. I want you to be in control. Now I'm going to quickly talk about fee structures. I mentioned 83% of employer 401ks, 403bs, 457s sit within mutual funds. Mutual funds, go Google this, have the highest fee-based structures across the country, no ifs, ands, or buts. 62% of clients have no idea where these fees are located. 18% of our, Americans actually know how to calculate them. But these are the fees that I want you to concentrate on. These 5 in particular. I refer to them as termites. They're just nitpicking at your retirement account, and they traditionally tack up to be somewhere between 1% to 3% on a national average, including all retirement accounts, not just 401ks. Why is that so important for you to understand? IRA Club does not care about percentage-based models. I care about flat fee models. Each one of our clients is charged $195. And I don't care if you have 10,000, 100,000, a million, 10 million. George, what's the most I could take from you from the IRA Club if you're a member? 195.
195, yeah.
That's it. I don't care. Think about this. For every $100,000 that you have a Fidelity, Vanguard, and Schwab, the national average is $1,500 versus $195. Now, you're going to ask yourself this question. How in the heck does IRA Club make any money? Per asset, per holding, per investment. We want you to diversify into different asset classes. Think of it like the Costco model or the Amazon model. We make our money on the membership. The more volume we bring in, the more money IRA Club makes. In turn, we want you to diversify your retirement account. So I want you to, and it's up to you, IRAclub.com, go to the resource page. There's these great calculators, and we have this calculator that's specifically designed for IRA Club clients because I want you to see what the savings are going to be for you, the IRA Club client. Again, simple math, $100,000. You roll it over from Fidelity, Vanguard, and Schwab, 10 years. Numbers haven't changed. Same numbers. Annual rate of return, 10%. IRA Club is going to charge $400, $390. Versus the Fidelity, Vanguard, and Schwabs of the world, let's just say between 1% to 3%. IRA Club is going to save you just under $70,000 in fees for the next 10 years. That's at 10%. Imagine if you made 12%. 14% returns on your money, 16% returns on your money. So we're talking about $110,000. Is this George's money? No. Is this my money? No. Is this IRA Club's money? No, it's your money. That's how they make money off of you. It's the long play for them. It's the long game for them. These percentages will literally eat away a third of your retirement account. That is what I want you to drive home from that slide. So what does the IRA Club offer? George, you've worked with me for a short period of time. You just got approved on Investors Row. Do we pick up the phone quite fast? Do we respond to our emails pretty fast, my team?
Yeah, I mean, from what we've witnessed, you guys are on it. You're on top of it.
That's what I believe in. Most people, I said, I want to talk about myself. I come from the hospitality world. I live, eat, and breathe customer service. I tell all my employees, nobody remembers the 10 great times that they had at one of my restaurants or one of my wine bars. They remember that one screw up. It's the same concept. Okay. White glove service. Nobody understands it. So we're going to handhold you through it. You're lost. You call. I don't know what form to fill out. You call. I think I'm causing a prohibited transaction. You call. Okay. We're going to pre-fill out everything for you. If you're having a hard time, we'll do all of the work for you. I just want you to do it one time so you understand the concept. And then you will get it the second time where you won't even call us anymore. True story. That's the way that it works. Okay. Your cash is, remember, FDIC insured, just like it is with Fidelity, Vanguard, and Schwab. IRA Club offers a trading platform for all its IRA Club clients, and we don't even charge an asset fee of $195. George, do you pay a dividend just out of curiosity?
We do distributions,
I'm
our
sorry, forgive me.
investments. Yeah.
Distributions, dividends. Yeah. So, like,
Yeah.
for example, somebody invests $100,000. You give it a yearly distribution?
Yeah. Usually we do quarterly and monthly depending on the offering.
Quarterly, monthly. So here's my biggest problem, George. You're going to pay somebody a quarterly dividend on $100,000 by, let's say, 5, 6, 7, 8 months. There's $4, 5, 6, 7,000 sitting inside the retirement account. Our clients in the past were shifting that money back over to Fidelity, Vanguard, and Schwab to do stock trading. You do not need to do that with IRA Club. We are part of a broker dealer. You could literally go pick your own stocks. I really don't care. In fact, we are the only self-directed IRA company that offers an AI-driven platform with a tech company called iFlip. It's been around for almost going on 9 years. So it's not brand new. They have a track record. You're more than welcome to use it. IRA Club does not make a single dollar off of it. That's another topic of discussion. Just to prove we don't have a problem with the stock market. We just know how to use it to our advantage. Everything is streamlined with us, from opening, funding, to the investment process. We do the annual tax reporting, the 5,500 forms, the 1099s, the RMDs, all of it's done through the IRA Club. Call us. And don't forget straightforward pricing. That's the most important thing. So how does it all start? With you. Opening the account takes minutes, 8 to 10 minutes of your time. You need a government issued ID. You need to be able to name a beneficiary. God forbid something happens to you, a social security number, and your most recent statement, let's say at Fidelity, Vanguard, and Schwab. We will actually do all the work for you. We have something called an ACAT system. We are fully integrated to a clearinghouse, so we could actually get everything over to you all in one swoop if you choose to do so. Fund. There's only 3 ways that you could fund. Contribution. So if you have a W-2 or 1099, it has to be earned income, not passive income, in order to make your contributions, whether it's an IRA or solo 401k. We even do safe harbor 401ks for employer and employees. Okay. So you could do IRA to IRA transfers from Fidelity, Vanguard, and Schwab. And in particular, to be clear, old employer plans. Okay. If you currently have a 401k, I'm sorry. Okay. You're stuck, and there's nothing more that you could do except ride the wave. I'm not saying not to take, by the way, take the employer match. Okay. 100%. But for those of you maybe that may not be getting an employer match 3, 4, 5, 6%, I would maybe consider using a portion of the 401k funds and opening up an IRA and making a contribution to an IRA so you could diversify it into something else and have a little bit more flexibility and control. And the last thing I can't do for you is choose the investment. That's where you would reach out to George, okay, and have those type of conversations. I hope all that makes sense.
We've actually got a question there that
Yeah.
you kind of touched on from Virginia. Says she has a Fidelity account through her employer.
Yep.
She chooses her investments. The question is, she's contributing 8% to her Roth 401
Good.
and 5% to the regular 401.
Good.
The reason is she gets a 4% from employer. Is this a wise decision? Everyone she's asked says it's a no-brainer, but to
Uh,
keep getting that extra 4% from the employer. So is that a
Listen,
wise?
take the money. Okay. I'll never say not to take money from your employer. However, just speaking out loud, I just gave you the stats of how it operates in the way that it works. Okay. You know that the stock market's going to give you, on a national average, every 10 years, it's going to give you, again, go Google these numbers, 6 to 8%, depending on when you're doing this and how you're doing this. Okay. So again, I don't have a problem with the stock market. Take the 4%. George, I'm just asking out loud, and I'm not endorsing you. So let me be clear. I'm not endorsing you. What are your returns on investment?
Our from the deals that we've exited, our average has been 47% IRR.
Stop. What did you just say?
47%.
Okay. I hope you're listening to that. Do you care about 4% or 47%? Do you care about the 7, 8, 9% returns? He's quadrupling that for you. Again, I'm not endorsing anybody. You have to have those conversations with them, not me. Okay. So I'm just the facilitator of your retirement accounts. I'm preaching diversification. Otherwise, you're never
Here,
going to
those
retire.
are that's just on the deals we've exited, right? I mean, our projections are more in the 18 to 20% annual, but yeah.
Thank you. And just to be clear, so you're 18 to 20, even still 18 to 20%. I just told you the returns are 6, 7, 8, 9%, and they're giving you a 4% match. Who's better? Okay, that's all I'm saying out loud. I'm shrugging my shoulders to everybody that's listening. So I'm not saying not to take the money, but think about diversifying a portion of those retirement funds. The problem is you're stuck anyways. You're stuck within the employer plan. So go back and do a track record and see how has it been performing the last 5 years. And I already know it's volatile for you, especially with Fidelity, because those numbers don't lie to you. Okay. With that, I hope that answered her question. One other thing that I want to do is practice what I preach, George. This is something I promised you. As we educate, I want to be able to offer a free self-directed retirement account the first year. So there's no tides between us. I want you to take the first step, not me. I'm going to give you the free IRA account the first year. The only thing you're going to be liable for is the asset fee of $195 when you decide to invest in whatever it is that you decide to invest in. And keep in mind, IRA Club does not charge an asset fee for using our trading platform. Okay, iFlip does. It's a $7 a month subscription. That's on you to decide, but it's drastically cheaper. I don't believe in percentages. Okay, at the end of the day. So with that being said, pull out your phone, scan the QR code. George, I think you have that actual link. If you could put it in the chat, or maybe you already did. I just didn't see it yet.
I did, but I'll put it in there again just in case.
Awesome. Thank you. And it all starts with Mandy. I love George. I love everybody that's listening. You know, I'm on the road 130, 140 days out of the year. You guys will never get a hold of me. I'm very hard to get a hold of, and I mean that respectfully when I'm talking to you, okay? Mandy is head of our onboarding and new accounts. She's got a team of 4 that work underneath her, okay? You want to scan and schedule a call with her, and also visit iraclub.com, okay? And just do a little bit of due diligence. Educate yourself a little bit more on the strategy. And for those of you with Quest, remember, I'm not charging anything the first year. Everything gets waived. If you have 5 or more assets, something I've been noticing a lot about Quest clients, if they have 5 or more assets, we're actually giving a deeper discount. But again, that is a conversation with you and Mandy, okay? And she will address that topic of discussion. Schedule some time. This is her calendar link. Feel free to do so. George, I'm so sorry. This wasn't supposed to be part of the presentation. So okay, if this is okay with you, I'll just say this out loud. This is Ava Marie Fakori, my youngest daughter, who travels with me to sometimes events, Chicago and whatnot. 27 days old, ladies and gentlemen. Roth IRA. I pay her from my company, okay, as a model. And she already owns 2 parking spots with her dad. So I partner my daughter on my deals. Partner your kids on your deals. And as much as I love everybody that's listening to me, I care more about your kids than I do you. Okay. Why? They have something that you don't have, and that's time. If you, the day that my daughter was born, or your children or grandchildren, if you're able just to put $7,000 inside a Roth IRA, that's it. Leave it alone. Put it, I don't care what you put it in. Partner it, an S&P 500 fund that's going to give you 9 to 10% returns, our AI Smartfolio platform. Never make a single contribution. By the time they are 59 and a half, when they qualify for the money, $2 million tax-free. That's the greatest gift you could give your children or grandchildren. I will literally give every single person here a free IRA Club account as long as you open fund it and throw it into something, anything. I don't care what it is, just to help your children and grandchildren out. Okay. Sorry, George, that I went off on a tangent on that, but that was an accident on the slide. I hope everybody learned something new. Uh, Wanted to, if that's okay with you, I'm just going to shift over to this IRA Club's website. And this is iraclub.com. Feel free to schedule a call. And this is the QR code and the link that he put in. It all starts with you. You could open an account right here. It literally takes 8 to 9 minutes to do so. But my recommendation is always going to be to schedule a call with Mandy first. Nobody, honestly, you have no idea, George, how many times people don't know what they have, what they're trying to accomplish, what kind of retirement account that they have. They're opening up, they're trying to do a Roth IRA, and they have a traditional 401k. So we just want to make sure that we're not causing a prohibited transaction, a taxable event. If you're not certain like what it is that you have, schedule a call with Mandy and the team. Okay. That's step number one. And then she will walk you through opening up the account. So I hope that answers some questions.
Yeah, if
And
anybody has any
George,
questions.
anybody, think you could see it more so on your side than my side.
Yeah, I don't see any other questions in the Q&A. If anybody has anything, go ahead and pop it in there. I do have a few things. I don't know, Mina, if you can
Please.
switch it over so I can share my screen, and then just so everybody knows, I mean, we've been wanting to partner up with a company like this for a while, and we met with a lot of different IRA groups out there, self-directed IRA groups, and we were impressed with IRA Club. I mean, we decided to go ahead and move forward with them, and a lot of what you said, as far as the communication and just um, customer service, big time.
Well, I thank you, George, for the kind words. It's a long time. So, it's a long time coming. And I'm just sick and tired of our retirement system and how broken it is, and just trying to help people like to think outside the box again.
Oh, let me see. Okay, I've got control now. So just a few things here before we wrap it up. I don't
Oh, we got
see any
one.
other questions coming in, do we? Okay.
Still working on getting dividends from my IRA club. I still put into a Roth and traditional IRA and still get the tax benefits. Okay. I think maybe a statement.
Uh, why can't I don't know why it's coming up so small, but so this is our newest investment offering. We just went live on it last week. So, here this is a 144 unit 2023 build, multifamily here in Dallas, Fort Worth. We've been looking for deals this year pretty much all year long. We've been negotiating this one specifically for months now, and we were finally able to get the seller to agree. So we're pretty excited about it. You can see the projected investor returns right here. So 19 to 21% on that average annual. I know we spoke a little bit about that through the presentation. Um, Average IRR 16 to 17%, and then it's projected to be a 5-year term. In that 5-year term, we're looking at a 2x, the 2.1x equity multiple. So if you're to invest 100,000 within 5 years, we're looking to double that. If you're interested, make sure to scan right there, and I'll take you straight to the deal. Mina, I don't know if you can put the link in the chat as well. Um, One huge thing we like about this deal is we're adding 8.5 million in value before we even close on it. The way we're doing that is we're getting the property taxes exempt. So we're removing the property taxes, which is adding 8.5 million in value. We've done that successfully with several of our deals now. So we're using that same strategy on this acquisition. And then we got a couple different class shares, but you can see more details on that if you go to the link or scan this. And then the last thing I got for everybody is we've got our live meetup next week. Actually, the week after next. Sorry, September, or is that next week? Yeah, I guess that's next week, September
Where's that?
19th
Where's that at, George?
in Dallas. So in North
Oh, I'm
Dallas.
sorry, I just saw that on top. Okay. Because I'm actually going to be, I'm going to miss you by literally like 3 days.
Oh
I'll
man.
be in Dallas, so that's why I was asking.
Yeah, I think we'll probably get with you too and see if maybe we can line up for one of these monthly meetups where you can come and speak, live. We've got about 50 to 100 in attendance. It's been picking up every month. So yeah, pretty good meetup if anybody's interested. Come meet us live September 19th. And that's all I got. I don't know if you got anything else to add.
Uh, no, actually, as you were talking, I was trying to see what my availability was for that date. Maybe if I could shift some stuff around. You said September 19th?
September 19th. Yes, sir.
What about? I could actually make it 5:30 to 7:30. I could come out for one night.
Okay.
Well, we'll talk about it
Let us know.
offline. How about that?
Yeah.
But as
Yeah.
far as, final thoughts, um, again, it's just a strategy. It's part of your arsenal, part of your tools that I want you to think again. Diversification, nothing against the stock market. We want you to, again, George, me, all of us collectively, we're just here to offer something different, just open up doors and opportunities for you at the end of the day. And it's just up to you to take the first step. And if you have any general questions, we're here to help you walk through it. And we'll leave it at that.
Yeah. I mean, look, alternative investments in general, I think are just a game changer when it comes to somebody that's, for a retirement plan and for building wealth. Um, it's something you have to look into. You got to get the knowledge and really diversify your investments.
Agreed.
Yep. Okay. Well, thank you all. Appreciate it. Thank you.
Thank
Take
you.
care, buddy.
Bye.